If you have money sitting in a bank account right now, this video could save you thousands of dollars in the next 12 months. Most people are following the exact same financial plan they used in 2025. And that's precisely why they're going to lose money in 2026. There's a silent reset happening in the global economy. No alarms, no breaking news, just math. And if you don't make 3 specific adjustments to your finances before the next quarter, inflation will quietly erase your buying power. Today, I'm going to open my own portfolio and show you exactly what I'm selling and what I'm buying. Let me start with an uncomfortable truth. Doing nothing with your money right now is not a neutral decision. It's an active loss. In the United States alone, inflation has quietly outpaced traditional savings accounts for years. Even when interest rates go up, your real purchasing power keeps going down. Legendary investors like Ray Dalio have been warning about the long-term devaluation of cash for a long time. Governments print more money, debt keeps rising, and the value of each dollar slowly erodes. So if your strategy is I'll just keep it safe in the bank, you need to understand that safety is an illusion. This isn't about panic, it's about math. Before we even get to investing, we need to talk about something more important: cash flow. Most people think wealth is built by investing. That's only half the story. Real wealth starts with control. In 2026, the people who win financially will not be the ones chasing the highest returns. They'll be the ones with the most flexibility. I call this the cash flow reboot, and it has nothing to do with skipping your morning coffee. That's just noise. Real leverage comes from eliminating the big, invisible expenses that drain your bank account every month. I'm talking about unused subscriptions, overpriced phone plans, insurance you never bothered to renegotiate, and high-interest debt that's eating you alive. Most people can free up hundreds, sometimes even thousands, of dollars per month just by cleaning this stuff up. This simple step does 2 critical things. First, it immediately reduces your financial stress. Second, it creates deployable capital money you can actually put to work instead of just watching it decay in a savings account. Now, we get to the part most people tragically underestimate. In 2026, relying on a single source of income is financial suicide. It's just too risky. Jobs are less stable than they've ever been. Automation is accelerating at an incredible pace, and companies are constantly optimizing for efficiency, not for loyalty to their employees. The smartest people I know aren't asking, how do I get a better job? They're asking, how do I build income that doesn't depend on getting permission from a boss? Now, this doesn't mean you have to go out and start working 18 hours a day. It means you need to find leverage. One example that's working incredibly well right now is faceless YouTube channels. You don't need a fancy camera. You don't have to build a personal brand. It's all about creating systems. Think about educational content, finance explainers, or even motivational compilations. These channels can be monetized through ads, affiliate links, and digital products. And once they're set up, they can scale beautifully. Another powerful option is promoting software and AI tools as an affiliate. Companies are willing to pay recurring commissions just for bringing users into their ecosystem. You don't need millions of followers to do this. You just need the right audience and the right problem to solve for them. The goal here isn't to get rich overnight. The goal is to build a safety net, to make sure that if one of your income streams slows down or disappears, your entire life doesn't collapse with it. All right, now let's talk about the part everyone really wants to know. Where am I putting my own money as we head into 2026? First, let me be very clear. This is not financial advice. This is me sharing my strategic positioning based on my own research and risk tolerance. My first major move is into real assets as a hedge. I am allocating a portion of my capital into things that don't just disappear when currencies get weaker. Gold is a great example. Gold isn't exciting, and that's the whole point. It's insurance, not a lottery ticket. Selective real estate also plays a role in my portfolio. I'm not talking about speculation, but about acquiring assets with solid cash flow and proven long-term demand. At the same time, I am absolutely not betting against technology, but I'm being very specific. I'm focusing on sectors that are tied to AI infrastructure. This doesn't mean just buying tech stocks in general. I'm looking at companies that support the core pillars of the AI revolution: computing power, data management, automation, and productivity tools. The mistake most people make is being too vague with their investments. But in this market, specificity is where the real returns live. Here's the bottom line. The economy of 2026 doesn't reward blind optimism. It rewards preparation. You don't need to predict a crash or a boom. You just need a plan that works whether things get better or worse. So, the 3 steps are: reset your cash flow by cutting out the fat, build new income streams that you control, and position your capital intentionally, not emotionally. If you want to not just survive, but actually win in 2026, you need a strategy, not just hope. If this video helped you think differently about your finances, do me a favor and hit the like button. Make sure you subscribe for more breakdowns just like this one. And I want to hear from you, so comment below. What is the single biggest financial change you're planning to make before March 2026? Thanks for watching.